The last stop of this train, sub $55, is now. The last stop for those orders is now. $55 last chance. Next key moves will be bigger digits, bigger tens, right the way up to the 90s and the $100. That will be a fast and brutal move, and it will make headlines.
When this broke out, the initial breakout around 2000 or whatever it was, and I wrote a piece for Forbes saying, oh, gold's breaking out. Yeah, I predicted it to go to 3.5, and then a couple of months later, I said, oh, actually, it looks like 4.5, and it hit 4.5. So, righteously, I should just sell, because it hit what I said it was going to hit. But reassessing it, I think it's got another 20% in it easily. And, if things really, really do heat up, I mean, the sky is the limit, unfortunately, for gold. And it could go to 8,000 to 10,000.
The discussion highlights a critical moment unfolding in the precious metals market, where the window beneath $55 silver is closing rapidly. Analysts like Francishunt and Clem Chambers frame this as the final chance before the next phase accelerates into far larger price levels, moves that could push silver toward the 90s and even the triple-digit zone in a sudden headline-making surge. Gold's breakout pattern has already validated earlier projections, climbing through primary targets with remarkable speed. What began as a call toward 3,500 evolved to 4.5, and now reassessments point to another substantial leg higher. If current pressures intensify, financial instability, liquidity shifts, and global demand for tangible assets, the upside for gold becomes almost open-ended, with long-term scenarios stretching toward $8,000 and even $10,000. This market is entering its decisive phase, and the upside volatility is only beginning. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
A beginning of a very high momentum move in silver. You will be taking out these highs in a not too distant future. This is the Francis level of 54.50. We have highlighted this. I will fib this for you and show you that, in fact, you have absolutely pivoted by $4.50 on either side of this top and bottom. This is your final dip. The dip that took you from $50 all the way down to $2.50 in 1980. The dip in 2011 that took you from $50 well down to $14 at one point only took you from $54.50 up top here down to $45.55 down there. It was literally $4.50 either side, the 50% and the $50 Fibonacci. The beauty of symmetry, the beauty of someone who actually does real technical analysis is right here. Your 50%er is there staring you in the black writing. 50% of the pullback from 54.50 down to 55.50 is a total dollars of 9. You move $9, where previously you went from 50 down to 250, $47.50, and where previous to that in 2011 you went down from 50 down to probably a low of 11. That is the better part of $39. You went down 9 and it's over. It's already rebounding and it's getting ready to break out. This is the most important live stream I have given you for your preservation of life, wealth, and freedom. You will have optionality and ability to support and to continue. And I would like to see some likes if you value the fact that we are showing up here to bring this point to you in all its truth and grandeur about such a key move. Yes, that is where you are. That is what's happening. $50, 50% retrace mark. You are now well above that 50% mark. I put it in black so it pops. You barely ran the upside inverted head and shoulder that our community was well appraised of. We spoke about it. We said the reversal on gold. We said the reversal here. There is your little inverted. Where was its neckline? $49, the 38.2% Fibonacci. Retracements, you use Fibonacci from high to low. It absolutely matters. It absolutely works. Where did you retrace to after you spat up for your second high? RH2, only slightly lower than H1. That meant we were on the cards for a deeply ascending upside HVF on a major break that is going to see real price discovery come here and now for silver. Real price discovery coming here and now for silver. There's your 45.5 dollars. There is your $54.5. You are going to get possibly on a low time frame one more rejection, because as for 3 times and then your lady, so you will get similarly potentially, and it will be over in a flick of a switch. It might even occur in one candle, just like this is so small relative to the 3-month chart as your third rejection and now your break. So on an even smaller scale, this 12-hour chart, you will come and you will face the same beautiful symmetry that goes with technical analysis. You will have a rejection once, twice, and we await the tiniest and smallest one somewhere around here that you are still going to make. So if you're very, very lucky, you may find, and you're watching it on a low time frame, you do that. And that is it, my friends. That is your ball game from there on up. Forget about it. If you're not in, you will be chasing, and the bid. And you may, as part of this process, find that margin rates will go up. All forms of things will go up if you're not already in, if you plan to trade this on a leverage basis. Orders to buy for stacking, if you have any fiat that you seem to get rid of, you should be placing those. The last stop of this train, sub $55 is now. The last stop for those orders is now. $55 last chance. Next key moves will be bigger digits, bigger tens, right the way up to the 90s and the $100. That will be a fast and brutal move, and it will make headlines. Expect the headlines on lease rates to jump. Expect the fact that there is no more easy find, easy support the LBMA silver available. It will be cleaned out. Ponzi's will be exposed. Fraudulent banks might run into problems. There is all sorts of repercussions for price discovery. I'm not telling you it's going to be a better world. I'm not telling you. Readjusting post-pain, coming off the heroin of debt and fiat proliferation is going to be a puke fest of hair-pulling pain for the masses. And you will need to keep quiet about your ill-gotten gains as a speculator, because you chose to protect your capital from the psychopaths, the criminals, and the bent tables in the casinos that have always been weighted in their favor.
A powerful setup is forming in silver, and francishunt frames this moment as the critical pivot before acceleration. The symmetry in the chart is striking. Past collapses from $50 plunged to extremes, yet this cycle's pullback was barely $9, a fraction of previous declines. That shallow retracement signals strength, not weakness, and price has already reclaimed the key 50% Fibonacci level with momentum. Technical patterns show repeated tests of resistance, each rejection smaller than the last, preparing the structure for a decisive breakout. Once silver clears this zone, the move toward $90 and even $100 becomes fast, vertical, and unforgiving for anyone late. With liquidity tightening and physical supply thinning, true price discovery is about to begin, and the window beneath $55 is closing quickly. Let's get into the interview.
I mean, the thing about gold, and silver for that matter, is it's held up well. If you think that this is a liquidity squeeze rather than something else, I mean, you know, they could easily drop $500 on gold, easy, $1,000, because when people have to stop being in the market because they're getting margin calls or they can't support their positions, they normally take their profits and they close down their profits and they run the stuff which they think has got the upside but hasn't made the returns. So it's quite likely when you're in a problem where there's a crash, well, everything comes down in a crash. Doesn't matter how good the company is, they all come down. This is not a crash, but it's the sort of situation where people are forced to trade in a way where it's all about how much money they've got in their account, how much collateral they've got to support their positions. And I think gold and silver have done really, really well to hold up in this sort of environment. I think that's pretty bullish for them. And of course, it's running separate to liquidity. These prices in precious metals, particularly gold, have been driven by international tension, and that tension's just not going away. So the prices really it's a one-way bet. Yes, it will obviously take some corrections, but until the world starts to get sensible and starts talking about global trade and peace and not messing about and claiming land is theirs and fighting over scraps, that then until that day comes, until natural intelligence takes over, gold is going to be under pressure to go up. When this broke out, the initial breakout around 2000 or whatever it was, and I wrote a piece for Forbes saying, "Oh, gold's breaking out." Yeah, I predicted it to go to 3.5, and then a couple of months later, I said, "Oh, actually, it looks like 4.5," and it hit 4.5. So righteously, I should just sell because it hit what I said it was going to hit. But reassessing it, I think it's got another 20% in it easily. And if things really, really do heat up, I mean, the sky is the limit, unfortunately, for gold. And it could go to 8 to 10,000.
Market analyst Clem Chambers explains why gold's resilience amid tightening liquidity is more significant than many realize. Even in an environment where margin calls force traders to dump winning positions, gold and silver have refused to break down. That relative strength, he argues, is a powerful signal, especially when geopolitical tensions, not excess liquidity, are driving price action. Chambers notes that in any actual crash, everything falls together, yet this isn't that kind of event. Instead, it's a stress-driven reshuffling where precious metals continue to attract defensive capital. His earlier breakout targets of $3,500 and $4,500 have already been met, and a reassessment of the trend now suggests further upside of at least 20%. If global instability intensifies, he warns, the path toward $8,000 to $10,000 gold becomes entirely plausible as investors seek safety in real money. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.